Good afternoon, everybody. Well, good afternoon if you are on the East Coast because it's around noon. But for those who are on CST or a different time zone, it's still morning for you. So good morning to you. Good afternoon to everybody else. I am Shanta Thomas. I am an enrolled agent. I am a tax planning strategist. And today I'm going to be talking about how you can help your clients who pay more than $25,000 a year in taxes. You can help them legally eliminate that. So we're going to be talking about that today. I'm going to give you a few minutes to come inside. When you come in, I want you to say hello. Let me know how you're doing, where you're joining me from. If you don't mind, for some of you, drop your name as well, because even though I can see I have so many people on, I can't tell who you are because unless you've accepted the StreamYard, something in the back end, unless you've done that, I can't tell who you are. So I do try to check back and forth. Drop any questions that you might have. I will answer them in order as we go, try to get as many of those as I can. But I want to talk to you a little bit about, oh, hey, Mom. So I want to talk to you a little bit about how you can help your clients who are paying more than $25,000 a year in taxes be able to eliminate that. Now, when I say pay more than $25,000 a year in taxes, I'm talking about wages or in terms of estimated taxes through a business. So it doesn't have to be just wages through your withholdings. And it doesn't have to be just on the business side with the estimated taxes or the year-end taxes that they're paying. I mean, it could be a combination of the two. If they're paying more than $25,000, I'm going to talk to you a little bit about how I eliminate that. And then I'm going to have a special link that I am going to be sharing over the next couple of weeks. So stay tuned so that you can learn a little bit more about what it is that we do. I'll have a special link for you today, but I'll have some other links that are coming. Hey, Corey, it's good to see you. That's my brother, y'all, Corey DeShields. Him and his wife and I go way back. So they're like family to me. I'm glad to see you on. So today we're going to be talking again about how we can help your clients say who are paying more than $25,000 a year in taxes, be able to help eliminate that. So the first thing I want to talk about when I'm on this subject is what I mean by eliminate. Because when I say eliminate, I mean literally drive that number to zero. So when you hear companies like Amazon or others are paying very little tax or no taxes, that is a very real thing. One of the ways they do that is by creating new deductions and credits in their businesses through various investments, and then they're able to use those credits or deductions to drive that number down to zero. I'm going to show you an example. We're going to do a short little case study, but I'm going to show you an example of a scenario that we had where we did that. I'm going to show you a couple of examples. So that's a very real thing. So essentially what happens is we start working with the client. What we're trying to find out from the client is analytically, if we analyze your information, how much are you actually paying in taxes? And then once we have an understanding of how much they pay in taxes, then we can say, okay, if we take this amount and direct it into these particular strategies, that's going to allow us to get X cash flow back, or X credits, or X deductions, or a combination of all of that. And it's going to also allow us to be able to drive tax savings. And so the strategies that we use, some of the models are modeled after like Amazon. Amazon does this also on a much larger scale. And so some of the same strategies that they use, we also use and recommend. And so what we do is we put those in place for our clients, and then we're able to drive down their savings. So what does that mean? If you have a client who's paid $25,000 and we're able to take take them and put them in various strategies that drives that number to zero, what that means is we take it, we put it in an investment, and then it either creates deductions and or credits, also in some cases cash flows, and then so they're not actually end up owing money on their taxes. We actually use the withholdings or the taxes that would have been paid in. So one of the first things we do is we have a discussion around how much we can utilize from that particular client, and then we actually will analyze it and draft out and say, if we put it in this, that means this savings. If we put it in this, that means this savings. So we go through all of that, and then the clients tell us what they actually want to invest in. But we analyze all of it. We give them all the data ahead of time. We actually know what they're paying already in terms of taxes, and then we put it in our system so we can give them a side-by-side cross-reference that tells them this is the amount of taxes that you were paying, and if we invested, this is what the savings would look like. So it's very comprehensive. And at the end of the day, they're able to clearly see that if they make these investments or do these things, that it's going to create X savings. Now, where we get the money from again to invest in these things are the things that is the money that they would have put in the estimated taxes that they would have sent to the IRS or state in estimated taxes, or the money that they would have sent in terms of federal or state withholdings out of their wages. So from a perspective of, well, all of us as professionals understand that, but if you're not a professional, if you're not a tax professional, essentially what that means is when you get your W-2 at the end of the year and it tells you what your federal withholdings or your state withholdings, your federal or state taxes that were paid. Basically what we're doing is we stop making those payments. We have you stop making those payments. We do file paperwork to make sure that there's no issues. We take that money, instead of sending it into the IRS, instead of sending it into the state, we take it and we refund it into these investments. The investments then give us deductions and or credits back at the end of the year. So it's kind of like you take the money, you put it here, at the end of the year, you get that money back. So it's really like, honestly, you're not paying any taxes. So people are like, how do you do this? Sounds kind of scammy, but it's not. It's 100% legal. We use the companies that we use to invest in have been fully vetted. We have a full back office that we work with, and that we work together in order to help us be able to do the implementation. So from a tax professional standpoint, the things that you'll need to know is what the client paid in terms of taxes. You'll need to know, you'll need to be able to close the client, but we take care of the analysis and we take care of all the implementation. So you won't have to do any of those things. All of that falls on us. And when we do that, it really helps us to, one, make sure that it's all being implemented properly, right? That's very important. There's certain paperwork. We make sure all that's on the back end. So the client just has to go in and do their part, but we make sure everything is clear, concise, and done properly for our clients. Not only do I recommend these things, but I have also invested in them myself. So I don't really recommend anything that I haven't invested in or that I don't trust. And so that's very important to me, because if I'm telling a client who say is going to make $1 million this year in wages, and yes, I am working with clients who do make $1 million a year in wages. If I'm working with someone who's making that amount of money and they're paying somewhere in the $300,000, $400,000 each year in taxes, we want to make sure that we build those relationships and we have relationships that are not going to be tainted because they invest in something that is horrible for them. So I'm going to show you an example in just a second here. If any of you saw the Steve Harvey video that's going around right now that talks about how he had an accountant who was actually not taking his money and sending it to the IRS. He ended up owing all this money. Those are real things. And so one of the things I do try to do is make sure I'm building really strong relationships with my clients. That's very important to me. I work with high net worth clients. Good morning. I also work with high net worth businesses. And so that's what these advanced tax planning strategies are. And that's what we work with. So I'm going to show you an example here. This is literally an example that my partner and I say partner because I am getting ready to partner. I'll have more information about that coming out soon. But my partner and I put together some case studies just so we can help other people kind of understand what it would look like for a client or what it might look like for them. So one of the things that I do when I'm working with someone or they're interested in what we offer, I like to share with them. I like to be able to share with them what, sorry, I'm trying to share my screen. I like to be able to share with them some examples so that they can actually see, what it is that we do. And And so I am trying to get a file here. Give me a second. I'm trying to get a file so I can show you guys. I want to share my screen, but give me a second. Here we go. All right. So I'm going to share this with you. It looks kind of small. Let me use a different view. Okay, so I hope you can see this well. So this is kind of a scenario that we developed as just a case study. We wanted to look at a client who was making about $350,000. So that's what you see in this first example. They made about $350,000 as their adjusted gross income. The things I really want you to look at are a few things. Number one, you see strategy 1, strategy 2, strategy 3. These are three different scenarios that we used. And what we're doing is we're basing this off of how much taxes this person would pay. Someone who makes about $350,000 a year, I think they fall in like the $70,000 a year bracket in terms of what they're going to owe. You see, $75,200 is what they would owe federal, $14,100 is what they would owe state. Now, of course, there are some states that don't have a state tax. So again, this is a general scenario. I'm in the state of New Jersey. New Jersey state tax is killer. So we're just doing this based off of just some examples. This is just a general example. So in this particular case, as you see, the client paid about $350,000 adjusted gross income. We're saying this max deduction. What that means is there is a maximum deduction that this person would be able to take. It depends on the strategies. So those go into a little bit more complex things, but the things I really want you to focus down are these things. It says strategy 2, strategy 3, strategy 4. So these are some of the strategies that we utilize, some of our advanced strategies. In these particular cases, we went from owing $75,200, right? So in strategy 3 here, they only owed $4,000. This is one of our bigger strategies where what we will recommend to this particular person is that they actually not only use the totality of their withholdings for the year, which is about the $75,000, but add some additional income if they have it available and make some additional investments. And if they do that, instead of owing $75,000, they're only going to now owe $4,100. They also would not owe any state. Their approximate savings would be $99,000 for federal and $19,000 for state. So they almost get 100% back of their investment given in year one. In the other examples, you see the savings were $28,000, $28,000, $14,000 here in strategy 1 and $5,000 in strategy 2. So in these cases, as you see, what they're investing is much smaller, right? They invested $30,000, but they're getting $33,000 in savings. They invested $10,000, but they're getting $42,000 in savings. Now, why would that be important to your client? The reason why that would be important to your client is if they're able to have these savings, this basically means now this $42,000 or this $33,000 or this $118,000. I think I said 28 the first time, but $118,000. What that means is now that is literal tax savings, as in free money that they can do whatever they want with. They don't owe money on that. So they made a small investment in each of these cases. This is a big investment, but they made an investment in each of these cases. And as a result, it freed up this cash. So this is cash, in this case, $10,000, $35,000, $135,000. This is money that would have gone to the IRS and they would have not received any benefit back. But instead, we recommend for them to invest in these different strategies. And by making these investments, they get these amounts of savings. So if that makes sense, drop a yes in the comments. I'm going to show you a secondary example. Now, in this particular case, the reason why they didn't get 100% of their money back is because they have caps. There are caps to this, which means you can't go over a certain amount. If you hit that cap, depend on the strategy, some rolls forward, some can roll back. But in this particular case, we didn't do either or. In this particular case, we're only looking at this year. So we're not looking at rolling forward and back and that sort of thing. But in a lot of cases, like this particular strategy, yes, you can actually roll it back. And when you roll it back, it will actually allow you to get even more saving to come. I'm going to move on to the second strategy here. So again, if that makes sense, drop a yes in the comments. If it doesn't make sense, let me know, say no, so I can kind of go back and go over a little bit more. This second one here, and hopefully you can see this. I'm hoping it's not too small, but if it's too small, let me know. The second one here is similar scenario, but we're looking at someone who makes 500,000 a year. Right? As you see, the amounts of the investments are the same: 10,000, 35,000, 125. But what's different is the amounts of savings. So in these cases, this person, they would owe more, right? If you owe 500,000, you would owe more. So so the approximate federal taxes would fall here. But look at the savings: 43,000 and 60,000 and 20,000. I'm sorry, total of about $60,000. In this scenario, it's rather small, right? Federal tax saving. I think we got to look at this one. I think something might be off here. Ignore that one for now. This is the big one, because they would have owed quite a bit more at $500,000 in terms of taxes, right? So instead of owing all that money, they actually only owe $6,000, right? The last example, these same investments, they owed $6,000, but look at the savings. The savings is about $174,000. So they put in 135, they got 174,000. Now, what does that mean in terms of free tax savings? What does that mean? That is money that is now free of taxes. So they invested X. It gave them certain deductions and credits for the IRS, and as a result, they have these savings. So they're getting this money that's now free and clear, right, of taxation. So they can use it in whatever way they want to use it. So that's what advanced tax planning does, and that's how we utilize advanced tax planning. We like to take the taxes that somebody would already be taking and putting in, sending to the IRS, whether through estimated taxes or through withholdings. We like to take that specific money and utilize that. So we work with a lot of wage earners. We do work with businesses as well. It's important that if you have clients who are businesses, you have to make sure that their bookkeeping is right, okay, before you start doing tax planning with them. And you have to make sure that their taxes are right. I don't work with anybody who is of the impression that they're going to do their own taxes unless they're a professional, like a tax professional. If they are not a tax professional or have an accounting background and they're saying, I want to do my own taxes or I want to do my own bookkeeping, the answer is no, I will not do your tax planning, because there's too much at risk in this particular case. There's too much at risk to do that. There's too much at risk. So if I'm now allowing you to do your own taxes, right? If I'm allowing you to do your own taxes or do your own bookkeeping and you have something wrong, well, I just built this entire tax plan based on that information, right? And if that information is wrong, your tax plan is now also wrong. If you stop paying the IRS, or you have a client that stops paying the IRS a big sum of money, there's a likelihood that they will be audited. Audits are not a big deal when all things are in place that need to be in place. So what does that mean? When you have the proper paperwork and it's all solidified, we make sure in the back end all of that is the case. But what we cannot control for our clients is how they're managing their books, how they're doing their tax prep. So if we're not the ones doing it, we can't control that. That's a factor that we can't control. So if that's the case, I have to make sure that they're working with a professional and that we've looked at their items to make sure that they are in compliance. Because if they're not in compliance and they've done this and then they get audited, now we have some big problems, right? If their income, their revenue for the year is off, if their expenses for the year are off, they're out here trying to like buy G-Wagons and made $50,000 last year, right? All the stuff that's going around on social media. If they're doing those sorts of things, trying to save $1 here and $1 there, honestly, it's not worth the risk when you have tax strategies that can help them save this amount of money. Now, what does this mean for you? So if you are a tax professional and you're doing this sort of analysis and tax planning for your clients, this means that you're able to make a lot more per tax plan. Literally, we need you to bring the client in. We do the analysis on the back side. We do the implementation part, and you really need to close the sale. We will even get on calls with you to help you close the sale. So we do all aspects for you, for our students who are part of our mastermind program. So all of our mastermind students have the ability to learn these strategies and implement these strategies for their clients. And you make 100% of the sale. We don't make anything from the sale for these particular clients. We don't make anything off the sale. You make 100% of your sale. So that's really important. That's a really important factor, is that you make 100% of your tax. We don't take anything from the tax plan. We will help you draft the tax plan. So we'll help you with the deliverable. We'll help you with the process. We have a specific proven process that works. So we will walk you through the steps of what works. And you're going to make a lot more. General basic tax planning, you're looking at maybe $2,500 a plan. Advanced tax planning, a lot of those are starting at like $15,000 a plan. And so people always ask me like, oh, I want to do that. How do I do that? You do it by understanding advanced tax planning and also being able to implement it properly. So we go over that. We also have a coaching component. We have other things. But as I said, I am actually going to be partnering with someone very soon. So you're going to hear some information about that. But for anyone who is interested in doing this, I'm going to drop a link in just a few minutes after this call, where you can actually click on that link and see if you are a good fit for our program, if you're interested in joining and learning how to do these advanced strategies. I have had clients that I've worked with save hundreds of thousands of dollars. A lot of these strategies, you are saving hundreds of thousands of dollars. One of the strategies, for every dollar you put in, you get $4 in terms of a tax deduction back. It's a charitable deduction, so there is a threshold of 30% max limit that you can take for the year concerning the AGI, but anything you don't use can be rolled over to the next year. But as you can imagine, if someone puts in $25,000, then they're getting $100,000 deduction. That's significant. $100,000 deduction. That can, and in certain cases it does, largely impact how much they owe. And so I've had clients who put in about, a little under 200,000, but then ended up yielding about $600,000 refund. And that's federal, that was federal, but then there's also a state refund. So talking about driving down taxes and eliminating taxes. Sometimes people don't want to. Sometimes they just want to eliminate part of it or a small amount, but they're not all of it. So what you need to know as the tax professional is, what does your client want to eliminate? And how can you assist them with doing that? So again, really quick, I'm going to show you guys this again. I'm actually going to download it to make it a little bit bigger. I didn't hear as many of you. I'm just going to show the slides again and talk about it just really quick for anyone who might have come in. So if you've already seen this, I'm going to talk about it again. If you have any questions, drop the questions in the comments. I'll be around to answer a few questions, and then I'll be hopping off. So again, one of the things I wanted you to see was, sorry, give me a second. One of the things I want you to see was a case study. So again, this is a case study that we used, and in this particular case study, what we looked at were a couple of scenarios where, in this particular case, a client about $350,000. Give me a sec. Yeah, there we go. In this particular case, client, again, $350,000 AGI. We ran 3 different scenarios. The investment in scenario 1 was 10,000. Investment in scenario 2 was 35,000, and investment in scenario 3 was 135. So in scenario 3, what we were recommending is not only could they possibly use a strategy, but they could even put a little extra money in if that's something they wanted to do. And by doing that, it will give them bigger results. So you see 10,000 was put into a strategy, and the savings were about 42,000. In this scenario, 35,000 was invested and $33,000 saved, 135,000 in scenario 3, and 118,000 in scenario 3 with a savings. Again, the reason why they did not get a full 135 is because there are caps to this, and some of that will show up in the next year. But we're looking at year 1. This is just year 1 when we actually implement the strategy. Now, when you go to this next page, this was a scenario that we made up at 500,000. And in this particular case, in this scenario, again, same investments, 10, 35, and 135, but ignore this one. I think there's a issue here. We got to go back and fix that. But taxes paid, 108.8. Savings, though, here, 63,000, 43 federal, 20 state. Savings here, again, ignore this one because I think there's a mistake there. So instead of owing 108,000, they only now owe 6,000, and their savings was 173,000. And when we say savings, this is money that's now free and clear of taxes. So now they can take that money and do as they wish with. We also often recommend for them to take that money and invest it. So one of the things we recommend to our students is that for their clients, they should actually be working with a CFP or somebody who can help them with how to invest this money so that it can make even more money. Some of these strategies include, specifically this strategy 3 or this scenario 3, is there are some cash flows that come from that over multiple years. So that is also a possibility, but it's relatively small. So we want to be able to create other opportunities to create additional cash flows. This is a lot of money. So how can we use that money in a way that's going to be best for the client? So if you have a client who does not have a CFP, we do have a full back office that will help set up estate planning. So my partner and I that we're going to be joining together, their finance, I'm taxed, and we're putting it into one house. So we have full group of attorneys and others who do estate planning and everything else. So not only now do you have this free and clear cash free for your client, but now you can take that money and look at investing it. So if some of these things I'm like, wow, that doesn't sound too complicated, it's not very complicated. From your perspective as a tax professional, what you want to do is you want to take that information, take that knowledge that we're sharing with you, and you want to simplify it for the client so that they can understand, and you need to essentially close the client. We make it really simple for you. You bring the client, we do the analysis on the back end, we show you what the deliverable looks like and how to prep the deliverable, you close the sale. One of the things we're getting ready to do, I believe next month, is we're going to be having a sales person come in to do a sales training. They're a great salesman, taught me a lot of what I know around sales, and most of the time my sales rate stays in the 60 to 80% range. Advanced tax planning is a little bit different, but the key is understanding how to do the sales, developing it, and understanding when you're doing things of this size, that you've never worked with this client before to do this sort of advanced tax planning. When you're working with a client of this size, it's going to take you a little bit of time to close that sale. It's not going to close overnight. It does take time. So be prepared for it to take some time. But when they close, you're looking at big tax plans, profits for you, right? And for your client, they're looking at even bigger savings. So this is huge. This is huge for your client. This is huge for you. So if you're trying to help your clients legally eliminate taxes, this is how we do it, and this is what we recommend. We literally take the taxes that would normally go in through withholdings or through estimated taxes or year-end taxes. Instead, we take that, well, not year-end taxes. If they wait to the end of the year, now they're gonna have to pay the taxes and do the investment. So now they got to figure out, do they have some cash to do the investments? So I recommend that people start as early as you can in the year, because you can literally take the taxes that would have gone in and instead use that to invest in these different things, so that they don't now have to send that into the IRS, and they've created something that benefits them. The average time, I would say, to close, it really just depends. Um, I would probably say give yourself, I don't know, a month. It depends on the person. What's the word? We're actually tweaking our process now, so that when our clients get on the phone with us on the very first call, they have everything they need. And the reason why this is important is because when you're dealing with clients who are high wage earners that are making 500,000, a million a year, 2 million a year, or businesses that are making a million a year, 2 million a year, what they don't have is a lot of time. So if you can get them on the first call and you can say, this is what I need, this is what the deposit is. The deposit is very small. It's just to get a commitment from them to run the analysis. So if you can get them to, on that call, put down their deposit and get your documents from them all in the one call, well, then that's it. Then you now have their commitment. Then for the analysis, I always tell people, tell the client to give you 4 weeks. It's probably going to take you about 2 weeks to run the analysis, for our team to run the analysis. And I say give yourself 2 weeks to prep the deliverable. Now, how long does it actually take to do the deliverable? Maybe an hour. If you have an admin, I recommend that you use your admin to prep the deliverable. It's relatively easy and straightforward. And then you're going to come back to the client with the full proposal. We have a deliverable that we use. And you're coming to the client with a full proposal to outline, hey, this is what we're recommending. This is the cash flows it creates. This is the tax savings it creates. This is the investment, what it's going to look like. This is, all of that. We have a full sales process. Also, what your fee is going to be, all that stuff. And you go over it with the client. And then we're looking for the client to close on that call or within another call. Sometimes I do a follow-up call like within 48 hours. So I would say start to finish, this whole process, I say, is a month. And most of it is just giving yourself enough time to prep the deliverable. In all reality, all of this could literally be done in a week. But I would say maybe not a week, probably 2 weeks. The analysis sometimes takes a little bit of time on the back end. But all of that is done for you. So you're not actually doing anything. So let me know if that answers your question. But yeah, to close, it's going to, I say a month because initially you're going to get the original deposit, and then you're going to have to come back with a deliverable with their specific scenario. You don't want to give them a scenario like this that says, hey, I think like this is good sometimes to use as a case study, but this is not good to just use as a what's the word, for their actual proposal. You want their proposal to be specific to them. And so that's that. Does anyone else have any questions before I hop off? I am going to drop a link that if you are interested in doing this, people always ask me, well, where do I find clients like this? Well, the key to this is once you understand advanced tax planning and how you can offer advanced tax planning, once you understand that piece enough to be able to share it with your clients, you have to start advertising that you do it. You start advertising that you do it, and you'll start getting clients. Trust me. The reason why you don't have clients right now who do this, because they don't know that you have a service for them. One thing I can tell you too, for wage earners who are high wage earners, typically there is nothing that people can do to help them save money. And if they do help them save money, which most of the time tax and accounting professionals don't have anything, but if they do have something, it could be rather costly. We do just the opposite, where we just take the taxes that would be going into the IRS or the state, and we use that for the investment piece, which is what a lot of these larger companies are doing. When you see like the Amazons and stuff, that's literally what they're doing. But not all of us recognize that that's what's happening. So that's what we do. That's how we eliminate that for them. And again, we're talking about wages, right? So we're talking about the wages, wage earners, same sort of thing for businesses. These are just some examples again. So if you have clients that fall into these categories, you definitely can add this as an additional service for your clients, and really get to the point where you're working less, but you're making more. You can drive these services and spend a lot less time in the office, because you're not doing the implementation and you're not doing the analysis. All of that is done on the back end for you. We have people who handle all of that on the back end for our students. We just need you to bring the clients and to close the clients and that sort of thing. We support you and help you with that in the coaching. So in just a few moments, I'm going to drop a link under these video, and I'm going to also update some of the posts that I did over the last couple of days with that link. Feel free to click on the link. It's going to be a short assessment. It's going to see if you would be a good fit to work with us. We're really looking at working with people who are really serious about their accounting or tax profession. If you are earning over six figures, that's a bonus, but it's not mandatory. We're looking for people who have a strong background in taxation, who are eager to learn, that we can teach the strategies. Again, you're not doing a lot of the work part, but there are certain aspects that you need to know. A lot of the coaches will help you navigate this, and so you're not doing it alone. So just bring your clients in and we can support you. So we are looking for some clients, and stay tuned over the next week or two. I will start posting about a launch that we're going to be doing, a soft launch that is coming up in April, and that's going to be discussing the partnership that I'm embarking upon, and how you can join and be a part of that, which is still this mastermind, but it's going to be this mastermind new and improved. So for those who get in early, there is definitely some benefits for that. So I already have some students in, and I am looking for this month 3 more students. So if you are interested in doing it, take the survey. You can also inbox me if you have any questions, and or message me. I'll be happy to answer any of your questions. I don't see any other questions at this time, so I'm going to head out. Thank you so much for joining me today to talk about advanced tax planning. I'll be back next week to talk about it a little bit more, and feel free again to inbox me and learn more about advanced tax planning. All right, you have an amazing day, and I will talk to you soon. Bye.